What's going on, guys? Welcome back to another episode here on Let It Grow Investing. I'm Jeff. Thanks as always for stopping by. So yeah, we've got a busy week, not as busy as it has been with earnings the couple weeks prior, but yeah, nonetheless, still a lot to cover. First up, I did want to say a huge happy 50th wedding anniversary to my parents. It's quite the achievement, and it's, quite, we met up with them yesterday, and quite the amount of life stories, trials, tribulations, ups and downs, and everything in between to get there. And, just a huge congratulations to them for making it. Apparently, only about 6% of married couples in the U.S. make it to 50 years. So again, huge congratulations to them. And then going forward, what happened in the market? What happened with me? What happened with you? And a little bit of everything in between. Well, first up, I did have some sales this week. It was actually my biggest week ever on sales. I told you guys that I had some covered calls. Those ended up all triggering. Broadcom, I really thought that it wasn't going to trigger. In fact, I even texted my dad Friday night. I said Broadcom was at 304.70 something or 304.87. If it got to 305, I was going to sell it. Well, somehow these numbers and the extended hours came into play, which I didn't think that they did. So I guess I was wrong there. I'm going to pull up Broadcom for us. We're going to take a look here together. And yeah, here is, 304.97. So 3 cents away from my strike price. Extended hours brought it up to 305.61. So Saturday morning, they actually were assigned. So yeah, I am close on that one. But yeah, I don't know. I might add a little bit more back. I didn't really want to sell the full $30,500 worth of Broadcom. I really didn't think it was going to get there when I wrote this thing like a month ago. It was like 270 or something. I didn't really see a 10% rise in that amount of time, right? So it was probably somewhere around here in the mid 270 range where I wrote it. I was like, 305, 10% higher seems fair. I didn't really think we were going to cross that line. We did. And yeah, it brings some capital back into my account, right? 30 grand right there. Similar story on, well, not a similar story on price action on Palantir. I wrote this one for a 160 call. So I would have made a lot more by simply holding on to this thing and selling it. But at the same time, I'm still up 800 and some odd percent on Palantir. So this went from being my number one holding to still my number one holding at the moment. So I was trying to get out of a position where my portfolio was so heavily Palantir based, and I sold 100 shares at, this one was at 160 where I wrote this covered call. So I think I wrote this one a little further back. This might have been in like the 130, 140 range, something like that. I normally am looking at like a 10% gain over the course of that, like roughly 4 to 6 weeks period for that covered call that I'm writing. I'm looking to get a 10% premium within that 4 to 6 weeks, which is a lot of room to grow in that short amount of time. Again, it went through the roof, right? We saw this thing just kind of keep on climbing. When we were just in the past week, it went up, $16, $17 simply in 5 days. So again, this thing just kept going. If I would have sold these shares now, it would be worth, $18,769. However, I sold them for $16,000. I got the premium. The premium doesn't mean nothing when it comes to the amount of money that I could have sold them for. But again, I still took some off the table. I am essentially playing with house money on Palantir, on NVIDIA, and on Broadcom at this given point in time. So yeah, NVIDIA, where was that one? My covered call was at 177.50. It went to 182, so that's fairly close. I will probably add some more back here, right? Why? Well, hey, the PE, the trailing 12 months is at a 58. It's much lower on forward. It makes more sense to get back into this one. The PEG ratio is still cheap. Oh man, this PE is not cheap. That is not going to say that it's going to slow down. This is going to be a more volatile stock. I've talked about this one before. If the rule of 40 does break, if they don't have the margin or the revenue or earnings growth to support this just exorbitant amount of high growth multiples on PE, on every other metric that they are assessed on, things are going to come back down. When that's going to be, I'm not too sure. but we cannot just be up in the nosebleeds this long, this high, and simply think that it's just going to keep running forever. There's a lot of euphoria around it. There's a lot of, jubilation with people thinking that this is just the next stock that is going to make millionaires. It might, did very, very well for me. I don't want to see anyone get hurt. So now I had the around $65,000 that between selling 100 shares of Palantir, NVIDIA, and Broadcom, that I have to now think about what I want to do going forward. So I'm going to get on to that in a second. I did want to get to Apple. Apple went ahead and raised the amount of investment that they're going to be putting into the US. Trump is, more or less saying, congratulations, Apple. We're going to let you slide on some of these tariff concerns. We're going to do what we have to do to make Apple great again, essentially. Another MAGA, whatever you want to call it. So I'm looking at this one. You can simply see where this thing went. So now you can see this sharp rise. We were floating around that 200 mark. We took off over the past 5 days, right? And this is simply because Apple is playing ball with Trump. That's what it comes down to. So we went from 203 up to around 230 simply in 5 days. So that is more than 10%. We saw a massive rise here. This is simply another own it, don't trade it. Kramer tends to be right when it comes to Apple. I don't really want to buy anymore. I really still don't see the catalyst that takes them to the next level. I don't know if it's going to be another device, another car, another software, what it's going to be, but I'm not really seeing that next thing coming from that is really going to be the next new thing for them. Their free cash flow is phenomenal. It outperforms every other Mag 7 stock. It outperforms every other stock that's out there. They are just a free cash flow juggernaut. They might not even have the best products or the best features in their products, but man, they have an ecosystem where you just simply have to own more than one Apple product, right? The people that are in want to have all of it. And that's a great thing for them. The margins look pretty good on that thing. And, the way that they have been building it in China and India, it makes sense. If they have to make it stateside, it's going to be a lot more expensive. And I don't know how that looks for them if people are still going to be paying up for those. So I don't want to sell it. I don't really want to buy it. I'm comfortable holding it. The earnings are there. I do think that they could acquire someone to go ahead and grow some more. I think that's the lane that they've really got to look at in order to really keep the ball rolling for Apple right now. The service side of the business is huge. They really haven't come up with a plan for AI. I'd really still like to see something happen there to really get that movement going, to where they can kind of stand on their own 2 feet without simply just buying other people or other companies to be relevant. I mean, they're still relevant, but relevant as a growth company going forward, right? So I'm still long Apple. I'm just not in a spot where I'm like, yes, this is going to be the one that makes us millionaires, right? This is not the stock that is going to just post these huge numbers. Granted, it did this past week. We see the upside, right? The average 2%, right? That doesn't really account for the fact that we just came up more than 10% in a week. The high on the street is 275, low is about 180. I could see either of those things happening, just depending on what Trump feels like and what, Apple is willing to do to appease the government, right? I think those are going to be the big problems right now. And then really what they do going forward with purchasing another company. Speaking of that, they were looking at No, actually, I got this wrong. I think it might have been Adobe that was looking at Figma. I think I said that wrong last week. I still am not 100% certain, but nonetheless, I looked at it and now I forgot it again. Figma, right? I told you guys last weekend, do not just, get into a spot where you are buying this thing so high. We were looking at it. This is August 1st. This was 9 days ago. They were at 142. They just IPO'd, new issue out there. So they shot right up to about $143 a share. I said, don't chase this thing. It is going to burn you. And now simply over the course of a week, this thing is cratered, right? It is absolutely cratered. It's about half, a little bit less than half of where it was. But we went from 142 on the 1st down to $78. And this was on the 8th. So this is really a week later that it just got cut in half. And I was trying to tell you guys, don't chase this thing. I don't want to see people get hurt. And if you're not experienced enough or you're not staring at your computer or your 42 screen setup, you're going to get burned on this thing. And that's exactly what happened. So hopefully you guys kind of took that warning. This is a trader stock. This is someone who's going to be really, really active in the market. And I mean, yeah, you can set up a couple stop losses here and there, but they might blow right through them at the open or something, and you might not catch it, right? So it might be a case where you had a stop loss set for $20 and it opened at 90, right? And then it's already through it, and it's too late to even try to sell it. So I just don't want to see people get hurt. So I said, stay away from this thing. I'm still saying stay away from this thing. If there's a time where it gets a little less volatility in it, a little bit more established in the market, we know where it's going to go. It's got some things that you really like, more than 2 cents of earnings per share. We have a little bit of track record. That's when you maybe want to take a nibble at it and see what happens going forward. At least for me, if you're a trader or pro in the market, I'm not. By all means, do what you're going to do, but be careful, right? Be careful is really all I'm saying. What else do we have? Oh, we had Eli Lilly. I did want to take a look at Eli Lilly. This thing, yeah, I know. I've been saying buy this thing, or I'm buying this thing. I still bought this thing. Boy, this was a rough one, right? This was a big drop for Eli Lilly. We were in the mid sevens, right? And then we just cratered. They had solid earnings. They had really solid earnings. I think they guided north of their midpoint. Their guidance wasn't the problem. It wasn't the earnings. It was a phase 3 trial of orforglipron, which was that weight loss pill. They have Wegovy, right? That's them. Wegovy, I believe, is Lilly. Weight loss, GLP-1. Now they wanted to get into the pill side of things. Well, the pill side did not prove to be as effective as the injection or as Novo Nordisk's pill form of a GLP-1. So it is only about 12% of weight loss over 72 weeks on average in the trial that they did. And I want to say I forget the exact weight loss. It was in 20s or maybe low 30s pounds on the people that were in the trial. So not awful, but it wasn't as good as the injections, which I believe was like 15 to 17% of weight loss. There was a little bit higher of people stopping taking the pill due to side effects. I believe it was, well, this might have been Novo's, where it was about 4% of people stopped taking their 7 milligram tablet, or 8% on their 14 milligram tablet. That was on Novo's, and I believe Eli Lilly's was about 5%. I don't know that they broke it out by dosage. At least I didn't see in the little bit of reading that I did. Obviously, do your own homework there. But where do we want to go with this thing? Where do I want to put my money to play? Boy, the questions that I've been asking myself, the amount of self-talk you have when you make all these plays, and now you got to think about, where do I put it? Where do I put this money that I just sold out of these big positions? Well, like I said, I'm going to probably put some back in Broadcom. Maybe, I don't know, 5,000-10,000 back in Broadcom. I might do about the same for NVIDIA, but that still gives you around 50 grand roughly to play with, right? I still want to buy Lilly. I might be crazy. I am down on this thing. I'm not going to say that I'm not. So my total cost base is 29, total market value about 25. I am down. I'm aware, and I think still this is a great stock that got pummeled on the back of a phase 3 trial that didn't go as perfect as planned. They still have a strong pipeline. This one, you can call it a failure. You can call it not as effective, but I still think that there's going to be some people that simply aren't going to inject themselves monthly for weight loss. I think, we're still going to have people that would rather take the pill and they don't want to deal with needles. I think that is going to be somewhat of a factor in the other medications for Lilly, for Novo, for anyone else that gets in the game, whether it's Viking or whoever else, right? So I think that is going to be an option. I do think that Novo being foreignly held is going to have some play. I think that the price on medications from Trump's side of things is still going to be a driver, but now you're dealing with a company based in Indiana. I believe they're in Indiana. I know they were there in Indy when I was there. I think the building is their headquarters in Indiana there, or Indianapolis. Anyhow, I know that Novo is not. So do we get into a tariff battle? Do we start, taxing imports from on pharmaceuticals from other countries to make it less viable for them to sell here? Do we start pushing the fact that Eli Lilly is owned here, and I don't know if they're produced here. I would imagine. I'm not even 100% certain as to where they produce. So I'd have to take a look into that. I will do a little bit more deeper dive onto where they make medications. In fact, I'm going to see right now while I've got this pulled up. Just hop over to Google and see what we got. Where does LLY manufacture? And let's see, they are key locations include Lebanon, Indiana, where they're investing $9 billion, Indiana, and new sites in Research Triangle Park and Concord, North Carolina. They also have facilities in Kenosha County, Wisconsin, Limerick, Ireland, and Alzey, Germany. So around the world, right? They've definitely more focused here. They do have some European operations. Nonetheless, I still feel like Lilly has a lot of pipeline there. They are not a one-trick pony. They've got a lot going for them. I know some of these numbers are skewed, right? 53% upside. I'm not so concerned with what the analysts say. I do like to have some sort of knowing that they want to be buying it as well. And I go down here, right? We still got buy ratings. This one was on the 8th, which was Friday. Bernstein says price target of $1,100. I don't see that coming anytime soon. I don't see it happening within a year. But if it goes back up to 825 or 840 or 905 or 895, I see these as viable price targets within a year, right? If we simply get, one solid report saying that we changed something and it's doing X amount better, I think that's going to do something. If we release another product, again, another growth story for Eli Lilly. So I don't know that the GLP-1 or orforglipron, the weight loss pill, is going to be the end all be all for them. I do think that they have other opportunities, and I still don't think that it's a complete failure, even though it didn't put up the numbers that the injection did. I guess that's probably I think it's a once a month injection. So maybe that just stays in your system longer. I'm not too sure why that delivery is better or how it's processed within the body. I'm not sure. I'm not a chemist. I'm not medically certified in any way, shape, or form. So I'm not too certain, but I do think I'm going to have to invest some more in Lilly. I do want to average down. Maybe I add another $5,000 to this one, and I just put in $4,000 to $5,000 this week into Eli Lilly as well. So I'll probably be upping this position to a slightly larger, and we'll see what happens from there. I did want to take a look at some other stocks that I have been looking at. I don't think we're going to get much worse on UPS. One, I know that the CEO said, hey, this dividend is rock solid. The PE is super cheap. Does that mean that it is simply a buy? No, it doesn't, right? There's sometimes a reason that it's super cheap. The dividend does look safe. It is around 7.5%. I would be averaging down on this. We do have a slowing consumer. We heard that from them, but now we're also looking at inflation, potentially rate cuts coming very soon from the Fed with everything else that's been going on that we talked about last week. I do think that we could be getting some rate cuts. So maybe we get a little bit more consumer spending. They are getting away from Amazon deliveries. We've talked about that before. They do have a labor problem. We've talked about that before. So we know all the bad news. They have all the infrastructure built in. A lot of things coming forth, going. If we have rate cuts, if we have a stronger consumer, if people get off of unemployment, I believe we are seeing that people are staying on unemployment for longer right now. If we start getting people back employed and they're starting to spend more money and shipping more things, yes, the internet can do a lot of things, but currently it can't shrink a package and send it over the internet. We still have to order whatever we want to have and then have it delivered by, whether it's UPS or FedEx or DoorDash or whoever else. There is still someone bringing those products to our door. I don't think that trend is going to change, and I don't see any shrink rays being made anytime soon. I could probably be wrong there. It's a weird time in technology, and I could definitely be wrong there at some point in the near future. But as of right now, I don't know of anything like that being made. So nonetheless, I still think that UPS has a lot of problems. A lot of it is known at this point. The dividend at 7.5%, man, that feels really comfortable to me. I don't think that that's going anywhere. We might not get this major upside appreciation. Could we go up to 106? Maybe. If we even kind of meander around in the mid 80s and I'm collecting 7.5% to simply hold this thing until we get up to 95, I'm okay with that. yeah, as long as that dividend's solid, I am okay with 7.5% and not that much growth, right? It's kind of like buying Verizon or, well, I mean, Altria has actually been doing pretty well, but it was looking like a bond for a long time where you're just collecting that 7%. But yeah, we do have some sell sides. We do have some buy sides. Yeah, I mean, if you look at these success rates, I mean, the one that stands out would be Morgan Stanley, but their average return would be 1%. I mean, I could split hairs over that. Anyhow, I do want to add some. I want to average down. I want to get more in the way of dividends. I would like to put some of this tech money that I sold. You know, Broadcom was actually fairly high dividend for me from the standpoint that I've had it for so long and I'm up so much on it. The starting dividend isn't that great, but my dividend yield on my invested capital was much higher. Palantir is nothing, NVIDIA is nothing, right? So if I can get these stocks or this money back into some dividend paying investments that are going to pay me year in and year out and just keep buying more shares or simply putting cash back into my account to buy other things, I'm okay with that too. So I want to diversify away from being all tech. That's where Lilly, that's where UPS kind of come back in. I want to diversify my portfolio because of the growth that they have had in these other names and how much the Mag 7 and the tech names have really dominated my portfolio. So yeah, other ones that I'm still looking at, I am looking at Uber. I do like the fact of what Uber has to offer. I think that rideshare and full self-drive and everything else could be a huge factor going forward. I don't know all that much on them at the moment as far as the technicals, where to enter this thing. So I got to do some more research, but I do like the business, right? I think that this could be a stronger stock going forward. Maybe we don't all own cars in the future. Maybe it's like, you know, the big companies own the cars and you get a ride to wherever you're going, or your food just gets delivered by Uber in an automated vehicle. I'm not too sure that, you know, even 10 years ago, that sounds absolutely ridiculous. And my shrink ray comment was, you know, kind of out of a cartoon. But also, I mean, I didn't expect, you know, full self-drive to be driving people around Austin and Vegas and wherever else. And here we are. So the sky's the limit when it comes to technology. I still think that Uber and Tesla could have a bright future in some of these respective areas. Tesla could also be one that I add some to as well. I've talked about that one. I don't need to, you know, go through that again. Lam Research, I could see adding some more to LRCX. It is in the chip space at more of a reasonable valuation. This is on the trailing 12 months. I think we're in the mid 20s on forward. Again, a stock that is in the AI space, but hasn't really taken off yet. So there's a little bit of upside here. I still have a position. I do believe that this could go higher, and it's not one that's really gone much of anywhere yet. I am still holding Micron. I think that I could add more to Micron. We had some problems with DRAM pricing. Basically, it's a commodity chip that's in everything. They also have chips that lean more towards AI and that super fast processing that everyone needs with these large language models. Again, I'm probably sound to someone that's in chips. Like, I don't know a thing, and I probably don't. But I do know that they have a diversified portfolio of DRAM and AI focused chips, and DRAM commodity pricing, or lack thereof, it's almost traded like a commodity, has been super cheap. So until we start building, we have more and more demand for those DRAM chips. I think that this could be kind of staying suppressed. It did really well this week. It went up 6.5% or 6.25% on Friday alone. But again, this has kind of been in the doghouse. I think that this thing could really go higher, and I've already been in this one for quite some time. I might add a couple more shares. Just another thought there. Google, man, I still want more Google. And I think that this is a stock that a lot of people neglected from the standpoint of what AI is going to do to search, what ChatGPT is going to do to search. And then you see the article come out where Kathy Wood of ARK Invest is buying more. And I really don't care what Kathy's doing. She has a kind of a mixed track record, but I was reading into the numbers. The advertising business has gone through the roof for Kathy, or for Google. So Google, the fact of their advertising business has grown so dramatically. The YouTube advertising has grown even more. I still think that Google is such a relevant player. The AI spend that they're going to be having, the fact that they are just looking to grow this business in all aspects of search and AI and everything else, I really think that this is an undervalued stock. I do want to add some more Google. I might not shy away from Amazon either. I still think that Amazon is a great player. Wall Street's kind of been neglecting them for a while. With 18% of upside on Amazon, I think you're really, really safe in buying this thing, right? Even the low side says this thing's going up 5%. Yeah, there's no dividend, but I'm comfortable with buying Amazon right here, right now. And it's already a large position for me. I will probably end up adding some more Amazon as well. Other stocks that, might be at like a yearly low that you think you might want to enter into. Maybe the hype train's out there. ChargePoint. Oh man, it looks like it went up. It didn't. It had a reverse split. This thing, I don't want to even look at it. I don't care that someone thinks that this is going up 261%. I do not see it. I've gotten burned on this thing. I actually sold off all my ChargePoint. And even though it looks like it's probably at a yearly low, I mean, it's close to this yearly low, right? No, it's not for me. You're not in the right space. You're not at the right time. Trump is not about EVs. There's no EV mandate coming from him. There's the solar credits are going away. The EV credits are going away. I don't see any catalyst to where ChargePoint is a stock that you want to get into. And I say that, and I just said that Tesla could be one that I buy. I don't see Tesla as solely an EV play. I still think that full self-drive and everything else they're doing has a lot of validity going forward, and ChargePoint is not the play for me. So yearly low, does that mean it's a buy? Do we think it's going to go back up to 40? I don't see it happening. I sold out of it. I'm trying to offset some of the gains that I had on those other 3 covered calls. So I sold that. It is gone. It is done. I'm not coming back to it. We are at a yearly low here. This could be potentially another stock where I'm looking at. They had a decent quarter, and then they had a big write-off to make their earnings look like it was nothing. And I would have to go through all these lawyer solicitations to where they're trying to get you to contact them to join this class action lawsuit. And simply, I don't think that this has staying power. I believe that Lockheed is still going to get a huge chunk of money from the military budget. I think that we can see some upside here, and I think going forward, we're going to see some more. So I don't want to shy away from this one. I do want to add some to this. I don't think that the yearly low is going to scare me away. I think it could be a decent time to enter. And that being said, I know we came from way up here, and we are on a fairly poor year for Lockheed. It has not been easy. It hasn't been fun, but I do think it can come back. Any other terrible yearly performers? I know one that kind of gets thrown out there sometimes is bionanogenomics. It's at a yearly low again, right? And average price target is about 89% higher. I don't see it. I've seen too many. I mean, it could definitely do it. The genomics companies are hit or miss, man. You think that they're all going to go through the roof, or the biotechs, that's the name, not the genomics companies. There's probably fewer of them, but the biotechs can be so hit or miss. And they're here, and they got one little PowerPoint presentation, and they're barely bringing in any money. I mean, the market cap is 9.8 million. They probably did about 100,000 in earnings in a quarter, and people think that this is going to the moon. Don't simply think at 268 that this thing is coming back up to $37. I don't see it happening. There's so many reverse splits. There's so many different things that happen with this thing, and they try to make it seem like it's going to be the next big winner. But look at this. I mean, you got minus $54 of EPS, earnings per share, on a $2 stock. That is not sustainable. So don't simply buy in thinking, well, it's at a yearly low. It's certainly got to go up. No, this thing can go to zero. That is an option as well. So don't chase it. Again, I don't want to see anyone get hurt. If you're a trader, if you think that this thing is going to the moon and you want to be there for the meme rally, by all means, do you, right? But I'm not going to sit here and say that this thing is going to be the next great thing. I'm not buying it. There's a lot of stocks at a 52-week low for a reason. So don't simply just count them out because they're down there, but do some homework. That is all I'm saying. And, at the same time, just because they're at a 52-week high doesn't mean that they're going higher. And I've talked about that before as well. I'm not going to say any of them that aren't going to go higher, because they always can. And conversely, they can always go lower as well. So that is what I've got there. Stock of the week for me, when it comes to the investing challenge, I haven't looked too closely. I could say Lilly. I could say AMD. I'm comfortable with either. AMD and NVIDIA, they're giving 15% of their chip sales to China to the U.S. government. That is how it's going to go. That is going to be the fee that they are going to pay to the U.S. government to simply sell abroad or to sell to China. I wanted to pull that up real quick. Yahoo.com/finance. Let's pull up. I know it was right here. Let's take a look at this real quick. And let me get back over to, let me go ahead and share this one instead. There we go. NVIDIA, AMD to pay 15% of China chip sale revenues to U.S. government. I don't know that it's been announced where this money is going, or where the U.S. government is going to spend it. An unusual arrangement with the Trump administration to obtain export licenses for the semiconductor. So that should open up a lot of business for AMD and NVIDIA in China. And I do believe that that will be huge. But I also think that it is very unusual. And the fact that they have to pay this fee to the government to do so is, it's very strange. 15% of the revenues from the H20 chip sales in China, and AMD will provide the same percentage for the MI308. And reminder, they are on the 350 chips and they are going to the 400s. I still think that AMD is in the early innings. So yeah. So that's going on. I just wanted to cover that real quick. I'm going to go back over to AMD. We're going to share this one instead. AMD at 172. We came down from 182. Only about 5% of upside there. I do want to let this thing cool off. Tesla's still probably not a screaming buy. Meta makes a lot of sense to me. They are just continuing to expand. So Meta's around 13% of upside according to analysts. This is just kind of a quick cover. Eli Lilly, I might hold off tomorrow. I think it might still have a lot of volatility early in the week. CrowdStrike, I did add a share. There was some problems with Fortinet, I want to say. Someone else's cybersecurity stock came out, reported earnings, and it did not look good. So I did add some CrowdStrike down here. Reminder, they were at 517. They came back, roughly 100 points. So I did buy that dip. I might, maybe we go ahead and buy some more CrowdStrike. Let's throw $200 into CrowdStrike for the investing challenge. That's what I'm going to be adding. There's a lot of good names on this list. I made the list, so obviously I think it's a good list. But Lilly has still the problems with Trump, with all the fees that he's trying to charge and the way he's trying to raise medication prices. I'm still not too sure what happens there. That is kind of an asterisk around me buying more Lilly stock. CrowdStrike, they are still set to report at the end of August. So that one is still a little bit unknown. Costco has a decent amount of upside. I really am not chasing that one. Meta makes a lot of sense. Amazon makes a ton of sense to me. Tesla is probably a no. NVIDIA and AMD are kind of a bit of a toss-up after the run that they've had. So I'm going to go CrowdStrike because I haven't really bought a lot of it lately. I probably will throw some more in Amazon. I mean, a lot of these are on the list of things that I'm probably going to buy. And then I'll probably throw in some big money into some dividend stocks. That's probably where the rest of my money is going to go. So that is all the time that I got for you guys right now. Thank you very much for stopping by. This feels like it's been a long episode. I feel like maybe I had a lot to cover today. But thank you guys, and I will catch you in the next one. Take care.